The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, on Monday, one could say it was green light go across the grain and the livestock trade as we saw a really supportive start to the week led by wheat and led by cattle. Question is, will this hold? Is this a short-term rally or is this the start of something? We're going to talk about that here today. Joining us for a conversation, John Heimberg with Total Farm Marketing. John, good to talk with you again this week. And hey, you know what? We get a positive day to talk about for once, and especially with grains, you know, with all that green on the screen, that's something that we've become accustomed to not really seeing here for quite some time. So it was nice to get some positivity in here in these markets to start off the week on Monday, wasn't it?
Yeah, it was. You know, I mean, and like you said, we haven't seen this too often, especially good moves 2 days in a row. You know, we had the strong move on Friday last week. You know, a lot of that was tied to what happened between Iran and Israel on Thursday night. And, you know, so who knew what today was going to bring us? You know, was that just a short covering pop for the weekend and nothing really seemed to materialize over the weekend? So, you know, I think the anticipation was maybe the markets would be a little bit softer today. But, you know, with that, the wheat market decided to lead this thing out of the gate this morning and then brought corn and beans with it as we saw some really good money flow just come into the agriculture sector, period, today. You know, I saw strong cattle gains as well as gains in the hog market. And then obviously, you know, pretty much double-digit gains in soybeans and wheat as we've made a nice little price move here in a couple days.
Very true. Well, let's dissect this a little bit. And just in general, with wheat being the leader, a lot of the chatter I saw on Monday was dryness in southern Russia, dryness in the U.S. Central Plains, some frost over the weekend in parts of Europe. I'll even say maybe some frost in, you know, Chicago wheat areas too here, soft red wheat areas in the U.S. over the weekend, maybe thrown in there too. It felt like all of those things kind of combined together to give us a little bit of fuel. It wasn't maybe really one thing over another, was it, John?
Yeah, I think it was a combination of factors that came into play here with this today. And, you know, you touched on a few. First off, we've been watching the Black Sea region, getting hot, getting dry in that area. Do we start seeing some production cuts? But then you get a counter news story of Russia, you know, bumping up their wheat export totals for the year by a metric ton or two. You know, so that comes into play. I do think Western Kansas, watching this next system, looks like most of the rain is going to avoid that area. There's some chances for some people to pick up some moisture. You continue to hear more chatter, seeing crop ratings slide. Maybe there's a little bit of buying going into the U.S., you know, crop progress numbers here this afternoon from the USDA and seeing that wheat rating slide a little bit more. So that helps out that KC contract. You know, then again, too, a lot of moisture across the grain belt coming in here again, too. Where are we at in terms of this spring wheat crop? How's that come into play? Also did see the U.S. dollar kind of roll over towards the end of the day today as well. You know, and I touched on a little bit too, just the commodity sector in general, big drop in gold today. So that might have shifted some money flow back into the ag sector, which the funds were heavily short. And really of those positions, wheat, corn, soybeans are the ones that they're most short in. And that just could have triggered some additional, you know, money flow. Again, the key, though, is going to be what happens over the next couple of days in these grains, period.
Yeah, I'm going to be curious to see what the follow through looks like if we do get it on Tuesday. I think that's the big thing to really tell us if this is going to be a sustained rally of any kind. And to your point about the funds, I want to talk about that a little bit because the CFTC data we got on Friday, I mean, the combined ag position, you were telling me this before we went on the air, I mean, at or near record short. And I think that is something that, especially for this time of year, typically is an uncharacteristic of the funds, John.
Yeah, very much so. We're looking at a combined position and across the ag sector, largest in 4.5 years. So, you know, go back quite a bit of time. Dollars and cents wise is about being short $14 billion worth of agricultural commodities. So it's a big number, you know, and so we saw that. First off, you get a little friendly cattle on feed number. We'll touch base on that here shortly. And boom, cattle's up $2, $3, $4, $5 today and across the board for lives, then feeders. You know, so you saw strong money flow there. Even a hog market that looked like it put a bit of a technical top in did get firmness today as well. And then obviously the grains with their strong gains for the second day in a row. So it makes you kind of wonder if there wasn't some just general money flow in here, and that maybe the sellers are kind of getting done here in this time frame. Again, like everything else, though, I think maybe the trigger for that could have been that move in gold. They were heavily long that gold market. We had over a 60 cents or $60 an ounce drop today in gold on just calming of those fears in terms of the Middle East. And that just sends money moving everywhere. And the ags might have been the most benefiting of that group today.
Well, and to that point too, with gold, I know coffee and cocoa, two other markets that have been extremely volatile lately, they were sharply lower too on Monday. So all of those together, I think you're right. I think some of that maybe safe haven money moving back into the ags. I wonder too, and this is me hypothesizing a little bit here, John, but if we can get some follow through Tuesday, maybe even Wednesday, can get a little more, a few more cents on some of these grain contracts. Could that spur on some farmers selling, even though we're really getting into the heart of spring planting season? I guess that's going to be one thing that I'm going to be curious about if these markets continue to rally, John.
I think we saw a little bit of that in the core market today. We really struggled with 450 today in the July contract, 440 on the May. I think you just saw a window where, guys had price targets maybe sitting there and some product moved, very quickly. We do, and I've talked about this last week, and we really haven't seen the impact of it. Watching this May basis period, this is where those basis contracts kind of have to come together here in the next 5, 6, 7 days. And really, it's been a pretty friendly situation. The spread this morning did get down to 8 cents between May and June. It did end the day at 10. So we actually put a bearish reversal on that spread. So maybe that could be an indicator of that, little bit of bearish spreading, watching that spread widen out as guys are making that decision with that May contract if they got that basis set. So that could be something that could be a bit of a headwind. Don't forget, we also do have May options expiring at the end of the week as well. So a lot of contracts there that got to get moved around. So that could give us some volatility. And then first notice day for May futures right away on the 30th next week. So even though we've had a couple good days today, it might take a little bit of shuffling to get this thing kind of figured out here as we go through some of those key benchmark points in these markets, especially in these grain markets, over the next handful of days.
Well, and with that in mind, with basis and contracts coming up and options expiration, first notice day, et cetera, if I'm not defensive in the grains right now, should I consider getting defensive with my marketing? I guess talk about that a little bit, John. What are your thoughts there?
It's probably an opportunity again if you want to reward the rally, you move a little bit here or throw a cheap put underneath and lock something in this area. I know everybody's going to get really busy here based on the weather, over the next couple of weeks. So hauling grains is not high on the priority list. So, that's something we'll have to watch. The biggest thing we still got to keep in mind, especially for corn and in soybeans, is the demand concern as well as the heavy supply of corn that's out there. We just saw it a little bit here in the last weekly export sales numbers. Again, those soybean sales just not where we need them at this time frame. New crop sales for the 24 crop coming up for soybeans are very, very poor compared to where we were last year at this time. In fact, even though there's unknown destination sales on the books for the 24-25 marketing year, China has nothing on the books for 24-25. Maybe that'll start waking up here. We'll see. Those are all things that come into play that could keep that soybean demand in check. On the corn front, we're still pretty good value at this time frame. We're still waiting for that Argentina corn to kind of get into the marketplace. It's not there yet, but at least at this window now, the U.S. Export sales program is going well for corn. Shipments today, market year high at a little over 1.6 million metric tons. So it's encouraging to see that we've got sales on the books and we're moving it out. So that just means that product's gone in that regard. So there's some positives there that we still got to keep an eye on. But again, there's still just a large supply limiting this market overall here. And if we do start seeing some movement, I know I fielded a couple calls today of guys saying, should I move a little grain at this move? And obviously the answer was, where's it fit in your schedule? You got a nice little rally here. Sometimes you need to reward it a little.
I was going to ask you too, that weekly export inspections number for corn, I think it was a nearly 2-year high, to your point. So I was wondering if that piqued your interest at all here in this corn market, John.
Well, obviously those sales are on the books. I'm a little more concerned about the export numbers, the sales numbers that we get on Thursday. Reason why the last couple of weeks, they just haven't quite mustered up the energy that I'd like to see. Hopefully our export sale window is not coming to an end here. We need that to have a nice long tail. given the bushels that are out there. Especially with the Argentina supplies coming at us, Brazil supplies not far down the pipeline. There's still a lot of question marks regarding both those crops, but they're still going to have a decent amount of exportable corn coming out of those harvests that could keep a lid on prices. So to me, those shipments are nice because we know that stuff is gone, not going to get canceled. It's not coming back in that regard, but we need to see those export sales numbers that we get on Thursday. We want that up over that million metric ton mark. Last week was around 900,000. Prior week was a dismal 350,000. We need that number to be back up there for both corn and especially for soybeans too.
John Heimberg with Total Farm Marketing is our guest analyst here today on the show. John, let's go to livestock, cattle on feed. Again, we touched on that a little bit. Friendly, it's rare. We've been having a lot of these reports have kind of come in as a miss here, but on the April report, friendly, that placements number below expectations, on feed number 101%, largely just felt like a pretty good report, and the futures trade, I know, responded on Monday.
Yeah, it did very much so. Strong triple-digit gains in lives, especially in feeders too. That placement number sometimes is just basically a moving target when it comes to things. We had really strong movement in February, compensating for the lack of movement in January, and maybe we just didn't have a lot of room for those March cattle to find a home. But with that, though, the report I've seen did have a friendly tone to it. And we saw that kind of fire up the markets here today. On the other side, too, I talk a lot about money flow right now, but that's such a major factor. The funds ran away from this cattle market. Some of that was tied to the HPAI and those issues. And, we saw retail turnover, cash market calm down a little bit, and the funds just took this thing to the woodshed. They were actually sitting on Friday's report for live cattle, the numbers that came out, 32,000 long contracts. That's one of their smallest long position in a handful of years. So then we get confirmation that the cattle numbers are still not there, in that regard. So it just looked like a great opportunity for the funds to kind of say, hey, we need to get back in this cattle market. Now we need to get some follow through. We need to see the cash trade go. We need to see retail values continue to get back on the climb as we get into the summer grilling season now mentality. But going forward here, at least feels like we got our low in last week or a week or so ago with that spike on that one Thursday. And now we're getting some good push. 200-day moving average over the June contracts around 180. We'll see if we can get through that area. If we do there, that could really trigger some short covering and some long money flow into that cattle market. But then I still think we need those fundamentals, cash, retail, to come with it to really give it that boost it needs. Same thing on the feeder side. Big move. Gap opens today on the chart. So there's some strength. That just shows us there's some money waiting to get into that market. Obviously we did that in counter flow to a strong grain market. So, so I have to see how this kind of plays out here right now. But that was a really good day to start the week in the cattle market. Now we'll see if we can finish the week out and get those fundamentals to come along with this move.
Hogs, too, I think got some spillover support from cattle. Hogs, looked like maybe they were getting kind of toppy, but then a good day Monday. I don't know. Your thoughts on the hog trade, John?
Technically, again, I talked about this last week. We saw that funds really just run that hog position out, almost a record long, or at least one of the longest positions in the last handful of years. Turned it over last week. So, we'll have to see how that goes. Looks like technically we got a bit of a top in here, but we had some room after that price recovery for this hog market to move back up into that window. So maybe we're getting ourselves range bound in that June, 110 on the top, $1 on the bottom. We'll see where this wants to go to here in the middle. Well, still encouraging things though. That retail, cash market, the index continues to trend higher. I think we're looking at 13, 14 multiple weeks in a row where that has trended higher. Watching the retail values stay in that $100 area. So there's some support there. So maybe those hog markets just trying to find a little bit of equilibrium and narrow down this wide range that we put in here over the last couple of weeks.
Same question I asked in grains. I'll ask it for livestock here real quick. If I haven't gotten defensive in cattle or hogs, should I be thinking about it here with a solid move on Monday?
I think you need to keep that on the radar, especially in like the feeder market or something. If we do get we start seeing some recovery in the grain market, or all of a sudden planting gets delayed and this market gets edgy, we're going to see that cost of inputs go up, and that could put some pressure on feeders. So you're picking up $5 a day. You're still looking at $2.60 for those fall feeders. There's probably a window in here you want to start thinking about it. problem that makes it hard is cash market, futures market. There's such a basis between the two. It's really hard to hedge up anything out there. But I would start running some stops underneath the market. Think about where you could be in that regard. Set some targets. We hit them, put the puts in, let the market run. If it wants to, you still got the cattle, but at least make sure you're locking in some type of floor here, again, in this marketplace. But, right now, at least with today's action coming off of those lows from the middle of the month, it looks like we got ourselves a little bit of money flow coming back into the cattle space.
Well, of course, we want to remember that risk of trading futures and options can be substantial. You got to always think about that with your marketing on grains, livestock, etc. John, final thoughts from you real quick. Anything you want to share or reiterate for us today?
No, we didn't touch on the dairy market. It looks like we've got well past the HPAI issue. Nice move today on cheese up to $1.70 plus. So milk market takes out its most recent highs back into that $18 window. Even got summer or fall months poking at the $19 handle. So again, producers be on guard. Wasn't too long ago. In fact, it was the 1st of April. We were trading over $3 lower on that May contract. So this dairy market likes to move in quick swings, and right now we're on a very quick swing up. So make sure you're being proactive on defending some of that price too.
John, if folks want to reach out and get their questions answered, want to talk with you there at Total Farm Marketing, I know they could reach you. How can they get a hold of you?
Give me a call, 800-334-9779. Shoot me an email at jonh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com.
John, always good to talk with you. Thanks for joining us. We'll talk to you next week.
Sounds good. Have a great week.
John Heinberg there with Total Farm Marketing. That's going to do it for Market Talk today. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.